Don't forget to like, subscribe and share the videos.
Hello, welcome to Ganesh IAS Academy. This is the previous year question discussion, okay, in which we are going to see the economic questions, okay. So this whole session is all about how to approach a prelims and how to find the key within the question, okay. And if there is any elimination strategy, that is also we will discuss. So it will help you in the upcoming exams, okay. So let's begin the session. Okay. Indian government bond yield are influenced by which of the following? Okay, so it is not asking about whether the bond yield will increase or decrease. Okay, it is simply asking that what are the things that will influence or affect the bond yield of the Indian government bond. Okay, so Indian government bonds is actually called as GSEC. Okay, so its maturity period will be 5 years to 40 years. Okay, so they will make certain profit, that is called as yield. Okay, so what are the things that will affect the government bond yield? Okay, so it is just simply asking the what are the things that may affect the Indian government's GSEC. Okay, Indian government GSEC profit. Okay, if you are going to invest in GSEC, okay, you are buying a GSEC for a time period of 10 years. Okay, so 10-year bond of government securities you are buying. Okay, so you are investing certain money into that GSEC. Okay, so after 10 years you will earn certain interest payment. Okay, so that is called as yield. Okay, so what are the things that may affect the government bond yield? Okay, so that is the question they are asking. Okay, so the first statement, actions of the United States Federal Reserve. Okay, see, consider that US also having the government borrowing. Okay, so they also do certain borrowing activities. There they are called as a Federal Reserve activity. Okay, if the government of US is increasing their interest rate of their bonds, okay, of their government bonds, means what the investor will do, they suddenly just sell off the Indian government bonds and they will go and buy the US government bonds. Okay, because even the interest rate provided by the government of US is way more better than the government of India. Okay, for that they may just sell off the Indian government bonds. Okay, so the US government action of Federal Reserve, that will obviously influence the government bond yield of India. Okay, so that is the first thing. Okay, next, second thing, action of the RBI. Okay, if the consider that the RBI is buying lot more GSEC. Okay, you are already holding certain GSEC. Now the government is now the RBI is going for buying the GSEC. Okay, in the window of open market operation, they are doing the buying activities of the government securities, means that will actually reduces the yield. Okay, so there is a lot more demand for the means that will actually reduces the yield from that GSEC. Okay, that things will happen. Okay, so what the GSEC holder will do is they just sell their government bonds. Okay, so that thing also affect the government GSEC bond yield. Okay, Indian bond yield. Okay, that is also affected by the RBI action. Okay, no, so the third statement, inflation and the short term interest rate. See, normally the GSEC is for the long term. Okay, so you are going to invest in the GSEC. Okay, for consider that you are investing in the GSEC for 5 years. Okay, in that time period, okay, there is another short term interest rate is showing up. Okay, so there is another company is approaching into the market, or they are coming into the market to buy or else to borrow certain money. Okay, they are looking for the investor. Okay, and they are providing way more better interest rate than the yield that is given by the Indian government bonds. Okay, so the interest rate provided by the newly coming company is way more higher than the Indian government bond. Okay, so if the interest rate is way more higher than the bond yield of the GSEC, means obviously what the person will do is they just sell off the government securities and they will go for buying that company's bond. Okay, that is called a short term interest rate. Okay, for to reap the benefits of the short term interest rate, that thing also happen. So that is also influence the government bond yield. Okay, obviously inflation will have the certain impact on the yield. Okay, so all the three things will affect the Indian government bond yield. Okay, so the answer is 1, 2 and 3. Okay, see, it is all about the basics. Okay, so how the market bond will run. Okay, so it is all about the share market topic. Okay, so you have to be more clear about what is shares, what is equity, and how the bond yield will be affected. If there is more buyer for a single bond, means the interest rate will be reduced. Okay, so these are the some basic things you have to know. Okay, so by that you can easily answer these kinds of questions. Again, this is one of the most simplest question, and it is from the static part. Okay, so it is speaking about the bond yield. Okay, so again these things are, if you are well versed in the basic, means you can easily answer these kinds of questions. Okay, thank you.